sideways? Do we get some fake outs here? Then we start to go higher. I could see a play like that working out very well for the rest of the year. If we go higher, 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 I think the market's going to have to pull back. And then we're going to see what this type of pullback is made of. Do we have a dead cat bounce or are we right back to highs again? I don't know. But I will say that inflationary pressures continue and they're persistent. CPI data comes out next week for the US on Tuesday for CPI. What is headline? Is it better than expected? Are we still seeing a sticky inflation level? Do the markets act, negatively to it? I don't know. We'll see. So I think it's a summer lull, and maybe the market stays inside this range again, even though we have a bit more news to maybe trade off of next week. We still have heavy earnings, but U.S. inflation might be enough to maybe poke the highs, but ultimately fail. Maybe fail early and then try to rally the rest of the week. I don't know. But if we don't really make any convincing strides above or below, then it's just still trading the range. It's about a 3 1/3 right now in the S&P, about 4% in the Nasdaq. I think the Nasdaq might have tried to poke highs. Okay, so here's your high, low in the NASDAQ, and you can see that this week we did actually try to poke those highs. We didn't sustain that breakout, but we got right there towards the Friday's high. So what does that look like for the NASDAQ next week? Well, I think the NASDAQ could, with this tiny little run all the way up here, is this a rising wedge to fall next week and still stay range bound? Sure. So maybe Monday, Tuesday, we'll look at that. Tuesday is CPI data. So keep an eye on that for the NASDAQ and for the S&P. All right, some other assets to discuss. Look, I think that if you're tilted bullish in the markets, I think there's still a lot of upside potential. I think that if we still have sticky inflation, it's good for assets. We have pro-growth, deregulation, fiscal policy that has been a game changer for the markets for the last 4 years, now 5 years. And I think it's taken away some of the clout that monetary policy has always had the last 20, 30 years. So don't underestimate fiscal policy because now it's not just the US is doing it and spending at deficit type levels or crisis type levels. The world is doing it. China is doing it. Eurozone's doing it. US is doing it. Those animal spirits continue to get lifted. Injecting liquidity into the markets continues to push things higher. We are seeing now that there is a executive order that is allowing 401k holders to start adding real estate and private equity and crypto to their portfolios, to allocations. I don't know if it's immediate, but again, we're talking animal spirits and liquidity into the markets. That's going to continue to push pressures to the upside. That's going to continue to add tailwinds to these markets. So we have more upside potential. If you're long stocks, I think it's still good. If you're long gold, I think it's still good. If you're long silver, I think it's still good. If you're long Bitcoin, I think it's still good. So I'm still long all these things. I'm just trading lots of options in the indexes and my stocks to generate the income as well as maintain that